China's economy has returned to growth after a record plunge at the start of the year. GDP in the second quarter jumped 3.2% from a year ago as the COVID-19 outbreak was brought under control and lockdowns were lifted.
The bounce follows a 6.8% contraction in the first 3 months of 2020 compared to last year. China, the first country in the world to be hit by the pandemic, has been recovering slowly.
Now let's get some insight on the numbers from our China correspondent Elizabeth Law, who joins us from Beijing. Elizabeth, 3.2% growth was a better than expected figure, and it means that China has avoided a recession. But what does it mean for the rest of the world? Is it a hopeful sign for other countries?
Hi, Jan, and hi, Ollie. So this clearly means, as you quite rightly mentioned, it provides a sort of beacon of hope to the rest of the world. I think firstly because China was was the first country to be hit by this pandemic, and it quite quickly shut down its entire economy, because remember, we've spoken about this many times before about how shutting down the economy led to a contraction in Q1 GDP. But at the same time, if you look at this sort of recovery that we're seeing today, look at this chart that we have on the screen, the growth of 3.2% per quarter is still not quite the same as the previous quarter. I mean, from last year, where it's regularly 6% and above. So what this shows is that China's economy does have a little bit more to go before it gets back on track. But at the same time, this is a hopeful sign, because this is about 3 months since the economy has properly reopened, and already we are seeing this. I think another thing that we need to take into consideration is the fact that President Xi Jinping today wrote a letter to global CEOs around the world. And what this means, because I think many people have been very, very concerned about the trade tensions between US and China, as well as the sort of political tensions between China with the US, the UK, Australia and Canada. So there are a lot of worries on that front. But what President Xi's letter this morning, we don't have a lot of details of it, but what this indicates to us is the fact that this shows that China is still open for business, and they're keen to continue opening for business. And clearly this is very important when you are the second largest economy in the world.
For sure, but even though the China economy has bounced back, there are still some areas of weakness, particularly domestic consumption. Why is that though, Liz?
I've spoken to a couple of economists and also just regular men on the street on why they don't feel that they want to keep on spending, and basically it boils down to two things. So one is the fact that even though the government has been trying to push domestic consumption, including supporting businesses and supporting people by giving out things like consumption vouchers, and which we've talked about before here, these consumption vouchers actually do come with caveats that you can only spend them at certain outlets, and also the fact that you have to have minimum spending for some. So this is very unlike what the Singapore government has given out, which is cold hard cash. In theory, this is great because it tries to make people spend more, and it is more targeted in where they want people to spend their money. But in reality, people still are slightly worried about where exactly this economy is going, because look at that 3.2 figure. Even if it shows that it is on the way to recovery, there are concerns whether or not this is sustainable and whether greater storms could lie ahead. So it basically boils down to the fact that people just want to keep their cash just in case of a rainy day.
Now, with China in recovery mode, what does this mean for Singapore, who is a major trade partner?
Right. So I think first we need to take this back a few days, where Chinese President Xi Jinping had a phone conversation with Prime Minister Lee Hsien Loong, where he not just congratulated PM Lee on Singapore's electoral victory, but he also talked about how Singapore and China should continue to work together to boost both economies and to help drive businesses on both sides. I think it very, very importantly, China is the biggest FDI destination for Singapore. So there are a lot of business interests here, there are a lot of government-to-government projects, and this really does bode well if the economy is starting to recover, is starting to open up. It's great for our businesses. I think one thing that needs to be looked at now is going forward, because travel restrictions are still very much in place. So if China's economy continues to recover, one big question is, are they now going to try and open up a bit more so that business people can come in and people who are based here can come back so that they can continue running their companies.
Well, thank you so much, Elizabeth. Always a pleasure to speak with you, and certainly keep safe in Beijing. We were speaking to Elizabeth Law, China correspondent at the Straits Times.